Hello InvTraXes. The foreign exchange market, also known as the Forex market, is a relatively new financial market that has undergone significant changes throughout its history. In the past, people used the barter system to exchange goods and services, and later, paper money was used as an IOU. However, it was not until the 20th century that the foreign exchange market became a major part of the financial industry. Before World War I, central banks supported their currencies through convertibility to gold. This meant that paper money could be converted into gold upon request at the bank. However, during times of crisis, when confidence in the financial system was low, banks could experience a run on the bank. If a large number of currency holders requested conversion into gold at the same time, especially if the bank did not have enough gold on hand to meet the demand. In 1944, foreign exchange controls were introduced in an attempt to stabilize the volatile foreign exchange market. The Bretton Woods Conference, held in 1944 in New Hampshire, established a system for pegging currencies and created the International Monetary Fund. Under this system, the US dollar was fixed at $35 per ounce of gold, while other currencies were fixed to the dollar. However, in the 1960s, the volatility between different countries' economies became more extreme, making it difficult for some to maintain the pegging system. As a result, the Bretton Woods control system collapsed in 1971 when President Nixon suspended the gold convertibility standard. The dollar had lost its attractiveness as the sole international currency due to growing trade and government budget deficits. During the 1970s, the European community tried to move away from its dependency on the US dollar by establishing the European Joint Float. In 1979, the free floating system was officially mandated. In 1992, the Maastricht Treaty was signed with the goal of fixing exchange rates and eventually replacing many of them with the euro in 2002. Under a floating exchange system, currencies are not valued in terms of gold, but rather in terms of other currencies. This system was adopted by many countries during the 20th century due to the instability brought about by world wars and other events. In 1971, the US closed the gold window by refusing to provide gold to foreign dollar holders, and in 1974, the Bretton Woods system of adjustable pegs was abandoned. This paved the way for countries to adopt any exchange system they choose. Are you ready to join the action? Start trading today. Join now by clicking the link in the description. Hit the like button and subscribe to the channel and click on the bell icon for daily videos. And if you're watching on Facebook, don't forget to like the video and follow and like our page. Good luck with your trading journey.